Let's get to the markets. As we said, back in so-called bull territory. Interesting, Jim, to see B of A be so plain about it. The title of the report is Bye Bye Bear.
Well, I have to tell you, the 5 facts piece, that's FAQ, was, I felt, not what I wanted to see. You don't want a bull market that's basically led by Carvana. Now, they did not mention Carvana by name, David, but, you have basically, if stocks are reviled, why is the S&P trading at 20 times earnings? Well, all of this is basically like, we shouldn't be in a bull, but there's nothing we can do. And there's going to be FOMO. You want to be actively a stock picker. And then, David, of course, I have to mention right up front because he's the oracle of AI. How do I invest in AI is a question. Now, that answer I've given 1,000 times. So yes, I regarded this piece, Bye Bye Bear, as Bye Bye Happiness.
Whoa, that's it. Done with that.
Good song.
Yes.
Okay. Now that we've gotten rid of that.
Yeah. Well,
we've defenestrated that piece of paper.
Defenestrate? Just a second.
It's a good one.
You know that
everybody
one.
No,
the reason why I didn't like the piece, what it basically says, okay, we're up from the bottom, and now what do we do? I would have liked to have seen something that's more rigorous, like maybe we shouldn't be here with a 5.5%, 6 months. Maybe we don't belong here given the fact that inflation can roar back. But none of that. No, it was all ethereal. It was all, frankly, David, an indictment of the bull market to come, with many charges, none of which seem really significant other than the espionage charge. Oh, I'm sorry. I mean, there was nothing significant about it other than the fact it was catchy.
Right. So you don't think it was a rigorous analysis on the fundamentals why the stock market really should go higher?
Right. And I don't want that. I don't want reportage about why we're in a bull. I want reasons.
Do you have any reasons? Do you think we're in a bull, or are you
I think we've
cautious?
been in a bull since October, and that the bull market's led by tech. And as soon as we broaden out, we have the fiascos of Carvana and the upstart short squeeze and lots of different junk, and everyone likes enterprise software now, even though very few are making money. So now we're back in that world. And you know what's going to happen next week? 4 letters, begins with the letter C, and there's always a line in front of it. And it's going to signify the new junk bull market that I most fear, Kava. That's going to be a red-hot IPO. After that, it's going to be biotech. Then it's going to be enterprise software. And then it's going to be nonsense fintech. And the next thing you know, we're back to where we used to be, which is awfully.
It'd be nice to see an IPO.
Oh, you're going to see plenty. Oh, no, the floodgate's about to...
Real? Oh, come on.
Well, that would have been better. The bye-bye...
We've had no IPO activity now for 18 months, practically. By the way, M&A activity remains at a very low number. It's why John Waldron from Goldman Sachs walks around pretty depressed all the time. It's like Debbie Downer.
You mean like he needs lithium? Is it more of a...
Just saying. It shows up
maybe
Bloomberg.
Boost bar? I mean, that could work for him. Those others, if
there's just not a lot of capital. There's not a lot going on. So Carvana may be important. I don't know if it's going to open the floodgates.
The difference between you, in your view,
Carvana,
and me, and my view... Forget...
Kava is not a short. Carvana and Kava.
It's Carvana versus Kava, and they're the same thing. When Kava opens at a premium, what happens is John Waldron gets off his antidepressants, gears up the machine. Solomon stays in his job, dynamite.
Right? Happy with his
and what we have is
what do we have?
The kind of thing that you and I hate: a summer rally based on companies that are Joby.
Let the good times roll.
That are Joby.
Well, short positioning is as dramatic as it was during the great financial crisis. You got $5.5 trillion in money market funds. This could go on for a while.
But it's not going to be anything we like. It's going to be on in the way it was in 2021, where we had we had 600 IPOs. Half of them, David, are companies that you can't even talk about on air because they're too small.
That's true.
I mean, like yesterday, we get a great memo every night. I don't know if you look at it, but Wheels Up was on it. And we work today, David. Someone took the price target down to 20 cents. I mean, that's
somebody still covers that. No, that's not.
Well, they're paid. Now, can I be not facetious for a second?
Wheels
the
Up
Kava deal is going to be red hot.
And we work.
And there's so many biotech deals that are David, there are biotech deals that are caged animals ready to come out here. And we're going to have to ring the bell, and it's going to be a company that has a cure for Ingrown toenails.
I will do it gladly. It'll be nice to have an IPO, and you can always.
You're going to have so many IPOs, your head's going to spin.
We're not going to have so many IPOs, our head's going to spin. There's only one important IPO coming this year. That's ARM. That's the big one. That's later in the year.
Stripes coming.
ARM Holdings. Yeah, okay, and maybe
some restaurants.
Stripe.
A lot of restaurants are coming. A lot of restaurants. Many biotech.
What's interesting about the B of A call, Jim, is that their fundamental analysis is still pretty negative. They're talking about...
That's why I didn't like it.
The credit crunch. Yeah. You had 11 defaults in 4 weeks.
That's why I felt that...
Claims are spiking.
The defaults. Now, if you go back over the Carvana, which to me is the story of the day, is stock, by the way, up 4 and 11%. Maybe it's time for an equity offering.
All right, well...
it's about the fact that they kept the bad loans on, and the loans turned out to be not that bad. And all's forgiven. Affirm has very few bad loans.
Well done for those who hung in there, because it did feel, the rumors of their bankruptcy were greatly exaggerated. And we remember that period where the stock was in the low single digits. There it is.
Well, people thought it was good water. But go back to what Carl's saying, which is my problem with this market with that piece, is, okay, here's 5 reasons why this shouldn't be happening, but it's going to happen anyway. I like the bull market that was led by the Magnificent Seven. That's my kind of bull market. Companies that are innovative, changing the game, doing great things. I don't want companies that are used car companies that are now making $6,000 per unit. That is not the stuff of a bull market.
Okay. How about Joby and Archer? Are they?
The return of the flying car.
Remember the flying car is back.
That's a flying
I haven't
pig.
talked about the flying. My favorite moment was that Morgan Stanley analyst who estimated that market. I think in trillions.
Well, that's called the top.
That was a classic.
That's called the top.
How that was allowed to get through the
that was the top. But do you know the word cocaine was in that song because it was not illegal at the time?
Canaccord initiates coverage of Archer. I haven't even heard these names, and Joby with buy ratings. Where are those stocks these days?
Those are stocks that are flying pigs.
Flying cars are back, Carl. I'm so happy. Yeah.